Hi, everybody. My name is Leonard Boord. I am a co-founder and CEO of Intotheblock, and with me is Alfredo Terrero.
Hi, everybody. I'm Alfredo Terrero. I'm co-founder and COO at Intotheblock.
And in general, some of the themes that we were pursuing when we went after this opportunity is we thought that the innovation was in its infrastructure development stage, so that the infrastructure was the play. Number two, some other guiding principles were that this is a new asset class that requires new analytics. And the third one was we also thought that we wanted to deliver human relatable information. So things that us as people could look at graphics and immediately understand what the relationship was with the asset itself. We're going to take about 25 minutes to go through the assets. We encourage Q&A, and we'll take care of the Q&A at the end of the presentation. So let's get going. So this today's subject is about diving deeper into crypto assets. And Intotheblock is the name of the company. You can log in and obtain a registration for Intotheblock and look at the indicators that we're going to be talking about. Myself, Leonard Boord, and Alfredo Terrero is here with me, and together we're going to make this interactive amongst ourselves so that we can add as much value as we can to the presentation. So, Alfredo, do you want to go through the categories?
Right now, if you log into our platform, we have about 28 to 30 indicators that we divide in 4 categories. Financial, anything that has to do with profitability and price, basically, of the asset. Ownership, we segment ownership by time held and also by concentration. You'll see examples of those indicators later on. Network, as the name implies, anything that is happening at the blockchain level of an asset gives us some indication of the activity surrounding that asset. And then on social, we have some metrics that we're following to gauge interest both from a developer and from a retail community, and we'll keep adding to those. So today, the way this is going to work is we're going to go through some of these indicators and sort of contrast two assets and sort of tell you like how to use the indicator, how it's calculated, what does it tell us, and maybe how to read it.
So the first indicator that one of the more popular ones is in and out of the money. So on the left side of your screen, you're going to be able to read how we calculate the indicator. And on the right, we're going to show you 2 examples of, in most cases, it'll be of a good or a bad or one positive and one negative of indicator. What is in and out of the money? We take all the addresses since inception, calculate the cost basis of what the assets that are being currently held is, and we take that cost basis and compare it to current price. And then we calculate whether it's a profitable transaction or not, whether the current holdings of the addresses are in the money or out of the money. We borrow this from option trading. Being in the money, the option is valuable. Out of the money, it's not valuable. And in this case, we have 2 different environments. On the top, we have Ethereum. And what Ethereum shows, the current ownership of Ethereum comprised of almost 30 million addresses. On the left, on the top chart, on the left, on the bottom, you're going to see in the money addresses, 6.92 million, representing 23%. This ownership group, if we were to characterize this ownership group, these are not happy in the majority of them. 72% are losing money. 4% are at the money. So 76% of buyers of Ethereum, at some level, at different levels, they're questioning the decision to invest in this asset because it has not been what they expected. Obviously, somebody that bought at 400 or at 500, like these bubbles here, 500 at 600, there's a lot of distance between that and the 198 that was the price this morning. So that's the condition of Ethereum. So it is no coincidence that Ethereum is at 20% of its all-time high. These buyers, these holders, these current holders are waiting for a price to appreciate and most likely sell into that price appreciation and recoup their investment. So the attitude of Ethereum owners is an attitude of people that are recouping their investment. If we go to Bitcoin, we find, Alfredo, tell us a little bit about Bitcoin.
I just wanted to add real quick, maybe this is obvious, but the bubbles represent clusters of addresses that bought at those, not at both, sorry, that their cost basis is at those prices that we see in the horizontal axis. So obviously, the further you are, the more out of the money you are with respect to price. And also, you can see that there's a very small bubble at what we call zero, but that's basically addresses that haven't moved since probably inception, and that's where it's a very small bubble. There's so many addresses there. So just to contrast the Ethereum case, in Bitcoin right now, we see that about 85% of the current holders, the addresses, are in the money, which is a completely different picture from above, and which tells us that there's not probably that much resistance in terms of price appreciation. We only have that big bubble of 3 million addresses, which seems like a lot, but in comparison to Ethereum, Ethereum has to go through many price stages where there's a bunch of holders that, as Leonard said, we cannot really say all these people are going to sell out, but it's sort of an analogy we can do. Most likely, what happened was that in Bitcoin, the weak hands, quote unquote, were shaken out during the last bear market, and in these addresses are addresses that probably some of them had before, but most maybe bought later, and now have taken advantage of this rally, and they're still holding the asset.
So the reason why we bring this up is which token do you want to join? When you buy a token, you form part of this shareholder list, of this token holder list, and the attitudes of your fellow token holders are going to affect price. They're going to affect price performance. So in these two cases, I think it's pretty obvious that you want to join the Bitcoin group, which is confident, happy with their decision, and less sensitive to price. So we're at 12:10. It's taken more than 4 minutes to go through the slide, so we're going to try to recoup some time because we have a lot of material to go through. Break-even price is a similar calculation to the in and out of the money, but we go even further. Not only looking at current holders, but not looking at current holdings, but looking at current holders and looking at their complete history. So the metaphor is Jeff Bezos, if the Amazon price goes to zero, is Jeff Bezos a poor man? No, because he's made profits all along the way in his holdings. So there are a number of Bitcoin holders that currently own the token, but that have made profits along the way. So we wanted to find out if people are playing with what is known as the casino's money, if you're only trading gains, or if you're trading your current holdings. So in the case of Bitcoin, what we find is that there's a very similar condition to current holdings in terms of the percentages. But as you can see, it's more granular. The machine learning algorithm that creates these clusters by which we organize the break-even price has determined that there are 3 categories on the right of those that are making money. In the case of the top case is Bitcoin, the bottom case is Ethereum. In the case of Ethereum, there are a little bit more addresses that have made money in the past and that are trading with those gains than there are in the current holdings. But in these two environments, the amounts of gainers is similar to the current holdings.
I just wanted to add that the reason the far left says that the price has to be negative for these people to break even is just that Jeff Bezos example that Leonard was saying, that even if the price went to zero or negative, these people have made so much money already that they're playing with casino money, like Leonard mentioned.
Perfect. Okay. these are all these indicators that we're showing are part of the financial indicators. So this is one that I really like a lot. Is called large transactions. So when we look at large transactions are identified as on-chain transactions that are larger than 100,000. Why 100,000? We thought that 100,000 was a clear break from a retail investor. We didn't think that a lot of retail investors were buying on a single transaction of a single token, $100,000. So that's why we call them large transactions. And in this case, you can see that Bitcoin, what you want to look for in large transactions is on the graph on the right, you're going to see on the top, you're going to see that the number of transactions continues to grow through time, through this year. This is year to date in both cases. And you're going to see that Bitcoin in the blue line, which is the number of transactions, the blue line is growing, and it increases as an order of magnitude. It continually increases throughout time. And we all know that Bitcoin at a low price in December, which would be here, of 2018, was at 3,200, 3,400, and it's grown to its peak of 13,000, 14,000 this year. And you can see that large transactions have followed the price. If it's predictive or if it's a trailing or a leading indicator is yet to be determined, and we have some trading signals that we're working on that to turn this into a leading indicator. But as you can see, large transactions are clearly related to price. In the case on the bottom of Dash, we find a very different transaction. Starting in the same period of year to date, we find that the large transactions dramatically drop, and throughout the period they increase, and Dash has recovered some of its losses, but very early it crashes. The large transactions disappear, so the little price burst that we had in Dash has significantly fallen down in terms of the strength. We don't find the same condition over here in Bitcoin. We find the large transactions are still very much higher than they were in December, January, February of the year. So large transactions, and think about this, these are 20,000, this bar is 20,000 large transactions of 100,000 on a daily basis. There's a lot of investor traction. If we look at the case of Dash, the order of magnitude is dramatically lower. It's only 120, this bar of threshold, that it overpasses. So it went in and out, but it never gained a lot of traction. I'm going to skip and let you do the next one, okay? Bulls and Bears? Yeah, it's okay. I mean, Bulls and Bears for us is basically doing, it's identifying the transactions that represent more than 1% of the daily volume. So in the case of Dogecoin, 120, 125, they're very evenly split. These are a lot of OTC transactions that are happening over here. And what you want to find out is an order of magnitude, how many people are involved in these transactions over this period of time. A measure of institutional volume, a measure of how concentrated or how diverse the trading signal is. They're going to be symmetrical. We found that since inception, that these are going to be symmetrical. This is telling you if you find imbalance, there is a clear signal, whether it's a sell signal because there's a lot more bears, or whether it's a bull signal because there's a lot more buyers. You want to do average transaction size?
Sure. So we also calculate the average transaction size through time, and that's very telling because it can tell us. So obviously, one part of that equation is price, right? So if price goes up, the other transaction might be going up if the number of Bitcoin is the same. But what's interesting to see here in contrast is that we have Bitcoin. That's the entire Bitcoin history. Okay?
Yes.
So we can see how Bitcoin became a much more, so the transactions of Bitcoin really went up during the 2017 bull market, and the average transaction has significantly went down in 2008, and that is recovering, which means like more like bigger trades are happening. In the case of Litecoin, if we see the year to date, we see that there are some spikes in large transactions, but there's no like clear trend in terms of the amount of sorry, not large transaction, the average transaction size per day. So some days we see that's probably one or two big trades that happen, but there's no clear trend of it going up or accompanying price.
So as Alfredo said, these three peaks indicate that there are either large sellers or large buy, but I mean significant orders of magnitude higher. So digging deeper, we can determine whether they're buyers and sellers or sellers, but there's some huge spikes here. And you look at Bitcoin and it's trending along the price line. And again, all of these data points allow you to choose contextually where you want to be, right? So large transactions, average transaction size, who the fellow token holders are, become all of them in the aggregate elements that allow you to choose an asset or not. We're going to do now these the average balance. So, you know, in the case of what we do here is we look at all the addresses that on-chain own a particular asset. Let's look at the Tether one. On the bottom, we can see that Tether, a significant amount of Tether was added to addresses. So it indicated that there was a flight to cash, a flight to dollar in this period of time, in the July timeframe. And since it has decreased significantly. So when you look at stable coins and you see that they spike, it is a flight to that cash, so less risk. And in the case on the top graph, in the case of Dash, you find that the average balance has consistently decreased. So this is a position that is losing strength along the trend line. So very different uses of the average balance indicator in these two charts. Correlation to Bitcoin?
Yeah, I mean, this is a fairly simple price correlation metric that we have for trading 30 and trading 60 days. Usually we wanted to show this to our users because there's always, you know, whether theory, like whether the market is all moving with Bitcoin, all the altcoins moving with Bitcoin, or there's a decoupling. And we see here, in the case of Augur, since June of this year, it was negative correlated to Bitcoin. And then it sort of like started moving with Bitcoin later in July. It's quite the opposite for Zcash. Like there was more correlation in June, and then in July there was a big drop, and then they both sort of behaved the same by the end of July until August, meaning that there was some correlation during a period of time, but then that dropped again. Signifying that, you know, we all know that during that time Bitcoin kept rising, going up, and the alts not doing so well.
So you can find on our website those assets that are highly correlated and those that are not. Address stats. So, you know, we now move into network indicators, which is closing the chapter in financial indicators. We now move to network. So we're going to measure the health. I use a metaphor internally, which is this is the engine that drives this blockchain. Is new addresses, active addresses, and zero balance addresses. So we think of zero balance addresses as addresses that have abandoned the asset. They could transfer the asset. So the net difference between zero balances and new addresses is something that we're constantly looking at. If a lot of addresses go to zero, but they're replaced by new addresses, that's one measure. But if they are, and then we look at what active addresses are. So let's look at these two scenarios here. We have on the top chart, we have the year to date. This is 2019. And on the bottom chart, we have the complete history of Bitcoin. As you can see, let's look at the chart on the bottom. The red line, which are active addresses in Bitcoin, continues to climb, trending further upward, even though we have an adjustment that happened in the time frame of December at the peak through June, December 2017 through June of 2018, and then it picks up again. This is a great leading indicator of activity in the network. And then we look at the year to date, And what I want to show you in the year-to-date is how the scale changes. So the band moves from 500,000 new addresses every day. And these indicators, when they break through and they change the order of magnitude, this is March 2000. This is March of 2019. And notice how it breaks through into 750,000 active addresses on a daily basis. And there's no coincidence that started to generate the significant price movement that happened in Bitcoin throughout the period. So we have a year-to-date, which gives you more into the period, and you can look at the complete history of Bitcoin to see how it correlates to price.
And the same, we also are measuring transactions and transaction volume. And again, we can see that in the all-time high, the all-time for Bitcoin, the number of transactions just keeps trending and trending up. Whereas this year for Ethereum, it seems like it picked up, relatively during May. Sorry, guys, I'm having a hard time seeing.
Yeah, it is May.
In May of this year, but the transactions have not really, blown out of proportion. And we were commenting, Leonard and I, before this, that Vitalik was mentioning that the Ethereum network was like clogging because of many transactions, and we don't know if that's because of ERC20 tokens or because they own Ether token, but doesn't seem to be the case. That is because of the Ether token, because the transactions are fairly constant.
So if you think about addresses as actors and transactions as revs, as the engine movement, the business activity, the trend line here is extremely positive on Bitcoin and throughout the whole history. And in this year, in 2019, which was our focus in the bottom chart, it's a little thinner. Again, engines, actors, transactions is something that we're looking at.
We have another indicator called the East versus West, and what we do here is because we timestamp every transaction for all the assets that we follow, we know when the transaction happened. So if it happened between 10 a.m. and 10 p.m. UTC time, we call it a Western transaction, which is essentially the the Americas and Europe. And if it's the opposite, we call it an Eastern transaction. And for every day, we calculate what percentage of the transactions happen in what part of the globe. Obviously, there's some distortion because of bots, but essentially that's the way to measure it. We have an example here of a Western token Polymath based out of Canada, and most of the transactions, so 60% or more of the transactions happen in the Americas and Europe compared to Asia. So if you're an investor in Asia, you might want to consider whether you want to get into a token that trades mainly in the West while you sleep. And the opposite is also true if you're in the US or Europe and there's a mainly Eastern token, you want to place your stop losses probably before going to bed.
So on the bottom, you see a list of Eastern tokens. Look at the red bars as the Western activity. So average time between transactions, again, we're talking about engines, actors, we're talking about transactions, we're talking about when they happen. And now we're going to look at, the amount of time between transactions. This normally is driven by in the case of Bitcoin, it takes 10 minutes, right, between transactions. But if the network gets clogged up, it'll take longer. So we look at Dash and we see that it has no problems, it's transacting normally, and all of a sudden in June, this huge spike. So if you're an investor in Dash, you want to find out what happened. So you want to see the news, you want to see whether there was a large transaction that happened, and you can correlate those to the large transactions on our website, and you can identify what actually happened here. And in the case of Chainlink, we can see that in fact their network has gone from underutilized to overutilized in the period, and it's understanding what is happening in these networks, where they're scaling up or not, to understand whether that's, think about this as the engine, can it handle the volume that is being requested of it. And we have the 30-day average, the 30-day high, and the 30-day low. And in the case of Chainlink, we have that. And these statistics are also available for each individual asset on the website. And we're up at 12:27, so we got to hurry. We're gonna run through these.
Let's hurry this one.
Okay, so it's important to know. It's important to know the average hold period. I want to know if holders of these assets are keeping them for a long time or if they're trading. And it's interesting to see Bitcoin 2.7 years, Dogecoin 1.6, longer than Ethereum. These are older coins than Ethereum. But I want to understand whether these assets, whether the holders, my fellow token holders, are in it for the long run or not.
Just a quick comment. This is calculated using a weighted average. So if there's an address that has a lot of tokens and has held it for a long time, that obviously changes the average. And that's probably what's happening in Bitcoin, where those addresses that hold a lot of tokens that haven't moved in years.
So we came up with the terminology whales.
Sure. We all probably have heard the term whales in the industry. There's no real definition of what a whale is, just a large player. We arbitrarily chose to qualify whales as those addresses that hold more than 1% of the outstanding tokens. So we can map out how many whales there are in an asset, given that definition, and how much of those tokens they're holding. And we also classify them as whether they're high activity or low activity whales. Because if in this case of Icon that we show here, we see 12 whales that hold 90% of the token, which is crazy. But we see that most of them are passive, so it means that you should be alert, but it's not like these guys are manipulating the price and doing a lot of trading, because that 300 plus transactions is defined as in its entire history. So there's probably a lot of like founder tokens there and whatnot that happened during the launch. But as you can see in the bottom, like the more decentralized assets are less controlled by whales, and by definition they're more decentralized.
Yeah. So you see here on the right column, 5 whales, 3 whales control a thin aspect of their assets. So again, think about this: are people making money? Is the network growing? Are large transactions coming in? It is the contextual aggregate of this information that allows you to develop a theme as to why you want to own this, or why, like in the case of Icon, you might choose not to own it because of its high concentration.
Right. And so instead of dividing, an asset into whales and everyone else, we said, okay, there has to be some category in between. And we came with the name investors, who weren't really whales, but they are probably in it for the longer term, and they hold between 0.1 and 1% of the token. Now, if we see Litecoin on the right, obviously by definition, being an investor makes you a very big player as well. And it's interesting that we found that although if we just looked at whales, there's only 3 whales with 5% concentration, we found 134 addresses that hold 41% of Litecoin. So that was counterintuitive for us. Like we weren't expecting this result, just because we thought the network was much more decentralized. In the case of Cardano, you see that six addresses control 26% of the tokens. Again, a lot of founders and those first tokens that were launched. But then when you add up investors, it only adds like 10% more. So the concentrations ends up being less than in Litecoin, which was very surprising for us.
So do you want to own an asset that is concentrated or not? This is a way to determine that. And so we define ownership by concentration, which is what we just covered. And we define ownership by the time that it's being held. So I want to know if my fellow token holders are growing in their hold period. Are there more of them that are holding the asset for a longer period of time, or is it just traders that is fueling asset growth? So on the top chart, we have Litecoin, and you can see starting in 2018 in August, how the number of holders of Litecoin continues to grow, kind of levels off here, but there's still steady growth.
Just to make sure, what we call hodlers, again, a terminology from the industry, and we decided to call hodlers those addresses that have held the asset for more than a year.
Right.
Yeah.
And in the last 12 months, Zcash has not had a significant increase in hodlers. It just hasn't happened. So whereas I see a lot of optimism in Litecoin, I don't see the same value in Zcash from this perspective. So hodlers own it for more than a year. Cruisers, don't ask us why we called it cruisers. That's a whole debate. It's still a debate inside of that company, but it's between 1 month and 12 months. And these are, as you will see in the next slide, traders 0 to 30 days. So traders 0 to 30 days, they become cruisers, and then they become hodlers. So cruisers in Bitcoin are diminishing because it's a 1 month to 1 year. But if we go to the hodlers, we're not showing it. You will see that hodlers in Bitcoin are growing. So the three families in Bitcoin are growing. And in Ethereum, we see a different situation. We see an environment where those between 1 and 12 months are becoming smaller, and they're not becoming hodlers. So let's look at now at traders. These guys are fueling price. So here we have Bitcoin and Bitcoin Cash. Notice how in the months of February, March, April, May, and June, exactly when price increased, the number of new addresses that held the asset for less than 30 days grew, and how it's starting to deflate. So that price pressure that new addresses, new money brings is starting to wane. In this case, it's totally erratic. I mean, Bitcoin Cash, new addresses has no rhyme or reason to it, and it's hard to predict. It doesn't mean that the asset is incorrect or bad, but it does mean that there isn't a steady push to move the asset through. So it's 12:33. Alfredo, we need to get going in here.
Just mention this last one for socials.
Go to social. Sorry, guys.
Right now, we're measuring on Telegram just the number of members in the official tokens group. We see 2 opposing views here. Obviously, Chainlink has been pretty hot this year, and a lot of attention in their Telegram group. Whereas Litecoin, for the same period, we see quite a decline. Again, this doesn't really give us an amazing insight by itself, but put it together with other indicators, and we can see what is, you can come up with a more global view of an asset.
And that's the perspective. It's all of these together can give you a better sense of whether to choose or not to choose to invest in the asset.
Right. And I just want to mention before we mention our next webinar that will be coming up in the next week or two. When you go into our platform, we'll have some trading signals that are more that take some of these indicators and put it more in a simpler way, like whether it is a bearish or bullish sign on the signal. This is more like the backup and like where those signals are going to come from. But as we mentioned in the first webinar, Intotheblock is an ever-growing ecosystem platform, and we had to lay the foundations first to keep building on top of that, with signals that are more actionable for you guys and for investors.
So we went through our first run of indicators. We are combining them to do what Alfredo just said, to turn them into trading signals. And we have a question that says, what are the leading indicators that an investor should look at before making an investment and investing decisions? I think that it is a compendium of them. So do you want to join a group of crypto holders, of digital asset holders that are making money or losing money? Do you want to buy into a network that is growing or shrinking? Do you want to use large transactions as a leading indicator of institutional money coming in? Do you want to look at the average hold period? Or do you want to look at the concentration? Putting all of those together, I think, gives you a holistic perspective as to whether an asset is investable or not. We are going to be delivering in the next couple of weeks more clearer signals that combine these elements to give you more leading indicating signals. This is all contextual information. Any other questions?
Q&A.
Any other questions, Alfredo? Well, with that, 12:36, we tried to deliver it at 12:30. We're 6 minutes late, but we appreciate everybody joining us. And we will have our next seminar Wednesday, September the 21st, and we will be talking about what data tells us about stablecoins. We have done a deep dive in stablecoins, And we expect to have some very interesting information to share with you in the next webinar. Thank you very much, everybody.
Bye. Thank you so
Bye.
much. And log into Intotheblock.com and try our beta version for free. Thank you.
Thank you, guys. Take care. Bye-bye.